People are like cattle. That's a saying my father is famous for. And basically the premise of that saying is that individually, most people are pretty smart. Some are smarter, don't get me wrong, some aren't so smart. But collectively, people tend to act as a herd and are somewhat predictable. And I say this in light of today's housing market, which leads to some very good lessons and presents some amazing opportunities if played right. So if you've been watching the news, everything is gloom and doom, the sky's falling, tariff negotiations are going to cause hyperinflation, the economy is going to crash, unemployment's going to go to 20%, the stock market will crash. What you're seeing though, if you're paying attention, is inflation down to 2.8% annualizing and probably falling. Employment is at historical full employment. We're at about 4%. You know, most people are working. The price of oil is down to nearly 4 to 5 year lows, like $60 some a barrel. It's down like 30%, which means gas prices are going to start coming down even more, and they have been coming down. We're seeing that the US just negotiated a 90-day reprieve with China. Is that a permanent solution? No. But China is now at the negotiating table. It's something that needed to happen. Our economy was on a collision course with catastrophe. You can't print trillion-dollar deficits indefinitely. I'm from Argentina. You'll have failure of government. Your currency will collapse. So what we're seeing is Japan and South Korea, we're getting close to tariff negotiations and opening up their markets. We are definitely seeing a lot of headroom. Now, I'm not going to make this a political argument. I really don't even care what side you're on. And if you care too much about that, I'd probably shut this video off, because you're going to let your emotions get in the way of you making money or smart financial decisions, which is not what I want. So here are the opportunities. Right now, most people are being like cattle. They're sitting in a herd, not knowing what to do, watching these things unfold. The smart money is out now finding bargains. I can't tell you when the bottom of the market will be. Maybe it's coming up. Maybe it's in 6 months. Maybe it was last week. What I can tell you is the prices have softened, prices are down, sellers are much more negotiable. They're willing to negotiate. We're picking up bargains. You know, I represent a lot of builders. We just picked up a home about $200,000 lower than the price that was initially quoted for us. It's a home we're going to tear down and build on. So the opportunities are out there now. I'm not saying that we're at the very bottom of the market. For all I know, we pass it, and you'll never perfectly time it. But what I can tell you is, going back to people are like cattle, you got to watch out who you're listening to. I'll give you an example. Jim Cramer. He's very famous. I think he's on CNBC. When the stock market went down, we lost billions, hundreds of billions. I don't know what our total drop was, a few weeks ago. He told everyone it was a 1987 event and everyone should look at selling. A few days after he said that, we had the highest historic increase. If you would have bought then, you would be up just huge. It was the quickest stock increase we've seen like in modern history. So he was acting like cattle. There's a thing I want y'all to look this up. It's called Japanese candlesticks. And basically, it's a statistical analysis where you can look at, is a market oversold? Is it undersold? Has there been panic selling? Or on the flip side, has there been too much exuberance, panic buying? We saw that during COVID. So right now, we're in this oversold mentality where people have gotten a little desperate and buyers aren't buying. And what that presents is the ideal buying opportunity. Now, you'll never perfectly time that ideal buying opportunity, but you can be in the right neighborhood. You can be in the right zip code, and that's where we are. If you look at the news today, Warren Buffett, he's finally retiring. He's 94 years old. He's most famous for his saying, the time to buy is when there's blood on the streets. Is there blood on the streets? I don't know. There are a lot of bloody noses in the market. And now I'm going to break this down to markets. If you look at a market like Somerville, an area where there's tons of land and there's been a lot of overdevelopment just from the builders. That's where you'll find these inventory gluts. There are well over 1,000 homes for sold in Somerville because they can just keep buying another farm, converting that to tract housing. And so it'll take longer for those areas to get out of that inventory glut. Because real estate at the end of the day, it's just a marketplace, supply and demand. When you get into the more luxury markets like Isle of Palms, Sullivan's Island, Old Mount Pleasant, Kiowa, there really aren't that many new homes coming to market. And what this means, take Isle of Palms, where I do the majority of my work. On Isle of Palms, I think I have about 30 to 40% of the new homes on the market. I really don't have that many more in my hip. Once I sell one or two, I'm out of inventory. And so once I sell one or two more, I'm out of inventory. So it's really easy. Like right now, there are 69 homes for sale. So these are single family homes for sale in Isle of Palms. During COVID, the lowest that figure went to was about 26 homes on the market. Now you have to imagine some of those are overpriced. Some of them are new construction, not finished yet. Some of them are pie in the sky valuations. So, 26 at its lowest peak, we're up to 69. It really does not take that many homes being sold from that 69 figure to go down into the 40s. When that happens, it starts to become more of a seller's market. When it's in the 30s, it's a hyper seller's market. When there are only 30 homes for sale, and imagine some of those are going to be oceanfront, some of them are going to be tear downs. So that means from that 30, there's only a few homes for each. If you want to be a block off the beach, there will only be a few homes for sale. So in lower inventory areas where you don't have the D.R. Hortons or the saucy Burbanks building home after home after home in these mega subdivisions where you don't have that, that's where you will see these the markets shift, more quickly. And what happens there is the power gets transferred from the buyer, which is who has the power now. Buyers have the power now. Now is the time for a buyer to execute that power, to put it to use. But it will not take too much time for that power to shift from the buyer to the seller. And so, I always say my database is littered with sellers or buyers who've been waiting for the market to correct. Although we will see general corrections, prices will always tend to generally increase. The U.S. as policy has that our inflation should be pegged around 2%. We're not far off that now. We're at 2.8. What that means is that assets will always keep going up in value, which means that housing will generally tend to increase. You might see dips like after the Great Recession of 2008 to 2011, you saw values go down 40%. They've tripled since then, 3x. So assets will generally keep pace with inflation. Real estate, gold, platinum, cars even, luxury cars, luxury artwork. The luxury artwork market is where you can see inflation at work. Remember that in 1970s, you could buy a house for $17,000. That house is now worth $750,000. So in lower inventory areas like Isle of Palms, Sullivan's Island, Old Mount Pleasant, Kiowa, Folly Beach, what you'll see is that inventory shift will hit more quickly. So if rates come down, they're at 6.75 now. If they come down to 5.875, you will see that inventory quickly dissipate and you'll see prices quickly strengthen. So you might get a better rate, but you will pay more for that house. And again, you can always refinance the financing on an asset. You can never refinance the price. What you paid is what you paid. So again, I'm not saying that this is the exact bottom of the market. I am saying that there are leading indicators, low inflation, low unemployment, cutting of government programs, tariffs are being renegotiated, and trade agreements are being drastically renegotiated. The government is cutting wasteful spending. All of this needs to happen for the economy to get stronger. Again, are they going about it the right way? I don't think anyone could answer that. I don't think any government or political party could truly ever implement it perfectly. But the writing is on the wall. The economic picture looks to be, at least from the leading indicators, that things are improving. And so we have this opportunity here where the sentiment is gloom and doom, but the leading indicators are showing that there's a light at the end of this tunnel, and the smart money, and I know because I have people looking, is out buying right now. So remember, people are like cattle. Don't just sit there and say moo. Now, if it's not the right time to buy something or you're not in the position to invest, that's fine, But if you are in the position and are looking for second homes or maybe to pick up a lot to build or to buy an investment property, This is the Warren Buffett, the bloods on the streets. These are the markets you have to be looking for. Don't be a Jim Cramer and miss that huge upswing. Get into the market. You know, maybe the house you're interested in, maybe that seller's not, flexible enough, but now is the time to at least be looking. I hope you found that informational. If you have any questions, just hit me up in a direct message and we'll talk to you soon.